And it's time now for our weekly market monitor who likes consumer names she says will do well in an up or down market. This is her first time on the program. In fact, she's Sarah Henry, portfolio manager at Logan Capital Management. Sarah, welcome.
Thank you.
You have a number of picks here, some very familiar names to everybody. Let's begin with Pepsi.
So Pepsi, when you think about what constitutes a really great staple stock, Pepsi has all the attributes. They have global reach, big brands, they throw off a ton of cash flow, they're important to retailers, high frequency turn. So we really think this stock will be a source of enduring earnings growth over the next few years.
Okay, and how about Unilever?
So Unilever, it's a little bit of the same song, different notes. It's a global, multinational HPC, personal care, food, refreshment, names like Ben & Jerry's and Dove, and the preponderance of their revenue comes from the emerging markets. And so those markets are growing much faster than developed markets, and it contributes to organic growth above expectations much of the time.
Sarah, we heard from other companies like Colgate Palmolive that international exposure is actually a source of weakness. Are you concerned with Unilever that strength might turn into a liability?
It's reasonable to, be careful about the emerging markets because they can be volatile at times, but we did not see that from the quarter that Unilever just reported. We saw strength. We saw consumers in those regions reaching for higher priced items, which is leading to higher margins. So that company has done a really good job at bringing to market the things that consumers want.
All right. And finally, McDonald's. What's the story there?
So McDonald's is going to report next week, and they have really engineered a whole-scale financial and entire renovation of their store base. They are rolling out these Experience of the Future stores, which has caused them to raise CapEx spending a little bit, but they have been another reliable organic grower. The thing that's interesting with McDonald's is that it is a royalty story. So it has a tendency to be less volatile than other stocks. We often call it a mixed staples company because even though it resides in the consumer discretionary realm, it is a very stable source of earnings and one that's likely to grow again for the next foreseeable future.
All right, Sarah Henry with some good, solid picks in the consumer sector. She says they'll do well in an up or down market. Thanks for joining me.